All right. Well, since we got that going, I guess we can just roll right into this segment, and I'll welcome in Scalp Trader. And he was on board with a trade in Cronus, CRON. And this is a great example of a stock and I guess a trading process that he does day in, day out. And sometimes it's there, sometimes it's not. Fortunately for us, it was there today. So we can have a somewhat real-time example of walking through his trading process, what he's looking at, what he's looking for, and how the actual trade idea develops. So I'm going to welcome in Scalp Trader. How are you?
Hi, I'm doing well, Jim. How about yourself?
I'm doing quite well. I know you've been pretty active in the marijuana space. You've traded Tilray from time to time, CGC, Kronos, and today things set up pretty well in CRON. Why don't you start from the beginning of the day where you saw some news in Kronos, and then how the actual trade itself began to develop?
Okay, that's sure. So I guess initially, I mean, Kronos wasn't on my radar as a pullback scalp long candidate, simply because it was actually trading up most of the pre-market. There was apparently some broker note out there suggesting that some positive news and from the legal standpoint in the pot arena going forward. And so all of the pot names were gapping up. So I had, I maintain a list of about 100 or so names that I'm always watching. And I noticed at the open that Kronos got hit pretty hard, far more aggressively than any of the other names. And so I quickly scanned around to see what was going on, saw that it was a broker downgrade out of Canada, and knew that that just wouldn't be, sufficient to crash a stock with this much momentum. And so I thought it was a gift to be able to buy it 2 points down. Kind of took my typical strategy of scaling in. I mean, I like to start half size and then scale in another piece to get on that full size position, hopefully at a better average price. And so caught a decent winner. And so, for me, as I noted last week, my trading size, typically I'm looking about $40,000 per trade. And that's kind of how I eye up trades in terms of, is it worth, my time to enter this type of position. And so for Kronos, I was able to get about, 0.10 or so, 0.15 or so on average on 2,000 shares. So, it's a quick couple $2,000 in, 15 minutes. So I thought about coming back and trading it again. I did scale out kind of aggressively because I thought I might be able to buy it again on a pullback and then ride it up for another 1.5 or so, but it never pulled back, and it actually ripped like another almost 2 points higher. So left maybe $2,000 to $4,000 on the table, but that'll happen periodically.
So was the trigger the fact that you were looking at all the marijuana stocks, the group as a whole was trading higher, and this one was trading lower? Is that what caught your attention?
Well, so one of the reasons I look at marijuana stocks currently, or any other group, is I look for volatility. So I run multiple strategies, and intraday volatility is one strategy. So you need intraday price movement in order to kind of be successful with that, right? You want things that are swinging wildly. You want a lot of momentum players, day traders involved. You want institutional shorts on the other side. You want skepticism in the story. I mean, all those things can combine create the opportunity for tons of intraday volatility. And I know you like to joke that I trade the same stocks over and over, but yeah, I mean, what I basically do is look for those groups that are showing kind of the most short-term intraday volatility and try to understand the patterns and understand the stories and the sentiment and what would potentially move something like this. And so with Kronos, I mean, I felt pretty comfortable that this thing was gonna be a pretty easy trade and bounce pretty quickly.
All right. When you're looking at a trade, sizing it up, what type of charts do you look at? I.e., is it like a 1-minute chart, a 60-minute chart? What time frame are you looking at, and what style charts are you looking at?
Well, I don't really look at things from a technical basis that much. I'm more kind of a sentiment-driven, I have more of a sentiment-driven focus. So I'm looking at the intraday short-term price action, or the daily ranges over a period of several weeks. So I mean, honestly, I watch these stocks so closely that I don't have to look at a chart on them. I mean, I know exactly what they've done every day, every hour for the past 3 or 4 weeks.
All right, so when you come up with a risk parameter, in this case you risked on your initial one it was 1.2 points, right? So how do you come up with that amount? Is that just this is the amount of money I want to risk on this particular trade, and it doesn't have anything to do with any particular levels that you saw on a particular chart? Is that fair to say?
Yeah. So I mean, so when I put out 1.2 points, essentially what I'm doing is I'm giving myself enough room to. Sorry, I don't know if you guys can hear that or not. I'm giving myself enough room to scale into the position on a downtick, and also kind of anticipating almost like a worst case scenario, right? So I started buying Kronos down 2+ points, and I'm thinking, down 3, it probably is about as bad as this is going to get. Now, if we get a situation where, there is maybe an air pocket in the name and, it crashes down pretty hard, I might adjust my stops and lower them and possibly add another piece. Like, I'm not opposed to taking a position up to, say, 1.5 times normal size, because unlike most traders, and I think a lot of people who focus on technicals and the charts is, a lot of times, well, I'd say most of the time they don't understand the story. They're not looking at the story. They're only looking at the chart. And so you might see a name take out a technical level, flush a little bit lower, and whereas the technical analyst would say, oh man, that looks terrible now, I'm thinking, wow, that's a gift. I want to buy more because I understand that there are buyers that are going to be sitting on the other side of this, and they're going to want to pick this up, and there's value here at this level.
And what gives you that confidence? Like, what gives you that edge that, say, the prototypical technical analyst, technical trader may say, oh, this doesn't look good? What gives you that confidence and that edge to go ahead and just buy it?
Well, because I'm also an investor, so I mean, I run a portfolio. I look at my own portfolio, I probably have 70 names in there, and so these are all names that I've done hours, days, months of research on. So I'm not just sitting around just, I think technical analysis is great, but I think that the approach of actually understanding the story provides, because my general approach is, I kind of look at my portfolio from kind of a holistic, perspective. Like, I'm only focused on my yearly returns. I don't care about my daily or my monthly or my quarterly. I just want the portfolio to perform on an annual basis, right? So there's times when scalping is not ideal when the VIX is low, but like, for example, in December, I mean, you had just the stocks just got wrecked, right? I mean, it's like one of the worst performing December since 2008 or something like that in 10 years. I mean, it was just absolutely terrible, but it created so much opportunity that, the ability to recognize value and buy aggressively, I mean, literally has set up my portfolio up for the next 3 to 5 years. I literally possibly won't have to touch my portfolio for 3 to 5 years and generate income and capital gains just from what I did from December 26th through probably the first day of January, first trading day of January.
And I think that's an important point to drive home, and we constantly will remind our listeners and anybody who pays attention to us that that's a very key theme about trading. Generally, this goes from an intraday perspective and also probably an inter-year perspective, that traders tend to make money in pockets, and you really got to know when to push the leverage and when to back off. And I think you do an exceptional job of doing that. Case in point, you were all over the crypto markets, well, a little more than a year ago, but you were all over it, and now you don't do it so much anymore. You have a little bit, and I presume that if things really heated back up in the crypto, you'd be all over it again, correct?
Exactly. I mean, keep an eye on the crypto markets. I don't actively trade them anymore. But I think there will be a time, maybe in the next year to 2 years, where opportunity will come back to crypto. I mean, I think institutional money will be gone by then. It'll go back to being just largely retail investors and traders in there, and that's where the opportunity will present itself, and you'll be able to get the chance to make 2, 3, 4, 500% gains in a week or 2 weeks, as you saw a couple years ago.
Right. So based on what you said, why don't we talk about some of the ways that you use the briefing product, the in-play product, or the audio product, and relate that to your actual trading? Does it help you formulate ideas? How do you process the information that briefing actually provides?
So yeah, I mean, one of the things I like, the main thing I like about our product is that we have people trading so many different styles, right? So now I do a lot of research, but there's so many different industries and sectors that I just can't cover, or maybe they're just like for me, like I like to be passionate about something, knowing that I can come back to it frequently. So for example, like Event Trader covers like solar names. Like I have no interest in covering solar names. So if I need to know something about solar, I go to Event Trader, right? Mm-hmm. Commodities Trader, it's all over the commodities. I have I like energy. I like oil because all of the MLPs out there. So I am one of those people who loves yield, and the combination of yield and distress. So if you can get something that is crush because oil prices are getting hammered, and there's a little color in the story, and you maybe can buy it at a 20, and this happens frequently. I mean, where you can end up buying something at 20-25% yield, the story gets turned around, and you get capital appreciation of 200-300% while you're still collecting a yield of 25+% for years and years and years to come. And so, I mean, when you get something like that, it's just like the gift that keeps on giving. And so when I get an opportunity to grab something like that, I'm all over it. So I guess my point is that energy is one of those groups that I really do like to cover because there's so much opportunity on the yield side. And if you buy one of those right, I mean, you can sit on it for 5-10 years and kind of keep milking it. So commodities traders on commodities, one of the people I really like as well is Chart in terms of his market timing. So, he makes major market calls that are really helpful for my style of trading in terms of knowing when to go in aggressively or to kind of dial back, leverage a bit, and also just kind of keeping my eye on different markets that I'm not necessarily paying attention to. So I think his commentary is very helpful. I look at the IPO pages a lot, the next big thing, just looking for new ideas. I mean, I like a stock that is under the radar coming out of its IPO that maybe can deliver 200 or 300% returns over the course of a year or a year and a half. And typically those names that kind of deliver that type of performance typically are recent IPOs.
All right. How frequently do you follow along one of the traders? For instance, if Chart Trader came on and put out a trade, how frequently do you actually piggyback that trade?
So I don't trade futures, and there's a reason for that. I mean, I think that, for me, I found that I don't really like using leverage. I found that it's just, I like to, on an intraday basis, I like to find my 1 or 2 trades, hit them hard, and then step away. And I've noticed over the years, in terms of, developing my trading style, that, if I don't have some way to kind of cut myself off, you're kind of constantly chasing opportunity, right? So, what makes you, stop? Markets open however many hours, what makes you stop? You can just kind of keep trading all day long if you have, the ability to use leverage. So I actually only use cash in most of my accounts. I don't have leverage on most of my margin on most of my accounts, because it essentially cuts you off, but it also forces you to think about your trades more clearly. So if knowing that, okay, well, if I want to put on several trades today, with size, I might run out of cash, so I might not be able to, if I get myself in a hole, trade myself out of it. If a better opportunity comes along, I might not have the capital to commit to it. And, if I start to kind of churn things so much that I literally drain my ability to, because it's, until the trades settle, I mean, you're kind of out of the ability. You don't have the ability to use that capital. So I might be essentially locked out of my account for 2 or 3 days until those trades that I took that day settle. So it's kind of like a just something that kind of puts handcuffs on you, because I know a lot of times traders start to kind of overtrade, and they kind of get into this like zombie land where it's like you really can't recognize up from down, and you're just kind of spinning around trading, chasing opportunities all day long, and your thinking gets really clouded. So that's one thing I often recommend to younger traders, is to limit their use of margin, because it becomes like gambling to some degree. Like, you can't pull yourself away from the table, and you're just like going after it. You're never satisfied. Like, oh well, you make a quick $2,000 in 10 minutes. Well, why can't you make 10 grand? Why can't you make 20 grand? Well, I mean, usually it doesn't work out like that. Usually what happens is you make that 2 grand, and then you just can't stop, and you keep going, and you've given it back, and maybe you're down 5 grand for the day, or 10 grand for the day, because you went red. Now you're revenge trading, and you're like making stupid trades. And so I mean, I've had those days where I started up 2-3 grand and finished the day down 5 grand, just because I was irresponsible and stupid, and just had too much money at my disposal because of the leverage.
Yeah, I think we've all had those days, and until you actually have to go through it, you really don't learn that lesson. But it's a very valuable lesson, and hopefully it's one of those things that you can do it once and learn it, but unfortunately that's usually not the case, is it?
No, not at all. I mean, that's like, if you had, if there was an opportunity for like a trading psychologist, I mean, that actually should be a profession. People just get psychologists come in and just sit down on the trading desk and help people think through the mental side of trading, because it does, it really does distort your thinking a lot of times when you have money at risk. And it just changes your approach and causes you to see things that aren't actually there sometimes.
Well, Damon, that's kind of what we are, in a sense. We do try to extrapolate that emotional component and try to keep people maybe from doing things they shouldn't do. For instance, a lot of times I always like to preach, if you're not seeing action on our trading desk, then it's a good indication to not do anything. It doesn't mean you don't have to. It just means that that is a pretty good gauge of the activity level. And if all the different traders on our desk aren't seeing opportunity, then there's a good chance that just there's not that good opportunity out there, and don't go and force it.
Yeah, that's an excellent point. I think that is one of the ways we really help people, because you can, you can pay that lesson yourself, pay for that education yourself, and depending on the individual, that lesson could cost you a few thousand to a few $100,000 or more. And I think for most people, it's more than tens of thousands of dollars of taking classes about actually experiencing that type of pain and experiencing those losses before they can really kind of get their arms around what's causing them to make these mistakes. And so I think the team does a really good job of cautioning people and really pointing out when markets aren't ideal for trading. It's such an important thing. It's so hard for most people to get their arms around. And there was a time, I'd say 4 years ago, that if we weren't actively trading, we'd have 10, 15 feedbacks by now saying, where are you guys? Why aren't you trading? This is moving, that is moving. And now I say we get one of those feedbacks maybe every quarter. I mean, it's not frequent at all. And I think most of our subscribers understand our approach now, and they recognize the value of it. That, yeah, just because something is moving doesn't mean that there was an ideal setup there. And, you could have lost money just as well as you would have made money. And so I think that's extremely important, and that's one of the real values I think this sort of service offers.
One of the lessons that I had to pick up on throughout my career was there's a big difference between volatility and I guess what I'd call predicted volatility. Meaning, if you can't get a grasp of the volatility, if you can't hone in on the moves and structure trades accordingly, just because it's moving doesn't mean it's good movement at all. Things could be flying all over the place, and you really have to know what you're doing at that given time. Now, what has always been more of a benefit for me is that next day. You see that big volatility day? It's that next day where, like, okay, I predict that there's going to be good opportunity. Now I can assess how to structure a trade. But when it comes out of the blue and there's volatility, just because it's moving doesn't mean it was good movement at all. I had to learn that, and it's easy to get chopped up in that. It's easy to get in that mentality of, oh, well, if I just do this and I just do this, and it unfortunately doesn't work like that. And that's one of the harder lessons that I had to learn. So hopefully the lessons that we have talked about over the years, it saves people money along the way, so that they can say, oh yeah, this is what Gavin or Damon had talked about, and now I'm seeing it reflect in my own trading. Maybe I should you can learn that lesson a little quicker.
Yeah, no, it's a really good point. And I think that, I guess, probably over the past, say maybe 2011, 2012, I really started to notice the presence of the algos and just how they transform the tape, especially on the intraday basis. And I think one thing that people often don't recognize, especially after hearing stories of day traders making so much money in the late 90s, early 2000s, and even all the way leading up to the 2007 crash, when there's just tons of opportunity on an intraday basis. The algos have really kind of transformed the price action. So it makes it, for someone who was a tape reader like myself, made it much more difficult. And one of the things I notice is that on an intraday basis, the algos will take stocks well beyond levels that you would expect. So something that you think, say it's traded, started the day at 28, pulls back to 26, typically has a daily range of maybe $1.25, and you're thinking, man, wow, this thing is well beyond its daily range. The news isn't that bad. This is an easy bounce play. By the end of the day, I think it would still be down another $1 or $2. So your 3-4 point range on something that typically trades a $1.25 range. And so what I've noticed is that price action, there's opportunity with those types of plays over a multi-day period. So you might see that thing flush down 3-4 points on an intraday and then gap down another point the next day. If you're scaling in slowly on a swing basis, you might see it back above even that original level. I mean, so you might be able to capture a 4 to 6 point swing over the course of a week versus getting chopped up for $1 or $2 on an intraday basis. Does that make sense?
Yes, absolutely it does. We do have a question, maybe more of a half comment, half question regarding your particular trading style. And this comes in from Mike, and he says, seems like 80% of your scalps are early in the day, and I would concur. I try to keep the lines open in the first 10-15 minutes because if there is a high probability of you making a trade, it's going to be within that window of time. Talk about why you like trading during that time.
Well, that's when you get most of the volatility. You have news impacting stocks. I mean, so like this Kronos downgrade today. I mean, the downgrade is, if it's going to affect the stock at all, it's going to affect it in the first 5 to 10 minutes of the day. And so that's where you get, all the major swings in price. You get stops getting hit by, especially in the momentum names that I look at. If something gaps down pretty aggressively, say 8 to 10% away from the previous day's closing price, you may have stops getting hit and just providing a really nice entry opportunity. And that opportunity starts to close pretty quickly. So you might have a 15 to 30 minute window to kind of get those positions on and take advantage of the price disparity.
Right. Speaking of price disparity, we had a question that came in a little earlier today, and we've talked about this on the air before, but since we do have some newcomers to the Trader audio, we can address it again, and I'd love to get your take on this one. Let me grab the question really quick. The markets move fast, and they notice that when traders make a call to buy or short, that the price has moved away from the stock or the futures price. Is there a rule of thumb as to where you would enter the trade given the price movement?
Yeah, I mean, so I'm normally, I would say, I would probably try to avoid buying anything that's over 25 cents above where my official entry is. And, I'd say wait, because a lot of times things will pop as people see the comment and they're piling into it, and then it'll come back to the entry price or below. I mean, so for me, ideally, I like to, I almost always start off with a scale in position, and I'm hoping to be able to get that second piece on. Like, I'm praying to be able to get that second piece on. So I would just wait. If you feel like the trade is kind of not ideal in terms of the price at that point, just wait and let it break where my entry price was before you start to scale into it. And so there are a lot of times where people are getting much better prices than I am. So maybe they don't get their first piece on until after it's popped and then broken my entry price. And then I go in for my second piece, and maybe that the stock goes down even a little bit further after I got my second piece on. So their average overall position is better price than mine. And you'll see situations where people literally don't start buying the stock until I put on my second piece. And so it's kind of like, oh well. Oh, sorry. Hold on just a second here. Sorry, I had the Bloomberg site up and a commercial started playing there.
Oh, no problem.
Yeah.
So, and I will attest to that. I watch these trades pretty closely, and you've pointed out that I try to keep you guys as honest as possible. Hey, if this thing's moving, we need to address this. If I don't feel that the trade, if you put out a trade and like, hey, Scalp, I don't know if you noticed this, but by the time I was able to get it out on the audio, it's already moved 50 cents and whatnot. And we've talked about that throughout the time that we've been on over the last year and whatnot. And we've really tried to get that as close to where you want to get in as possible. Like, you'll put out the trade and then you'll enter it, so it gives the listeners an opportunity to get on board. But I will also say that I watch it very closely, and many times it will come back to that price and go lower. And just case in point today, Kronos did that. I think it was about 20 cents higher than when you posted it. It came down. You were able to get your second unit on, and then on the way out, you had indicated that you got out on the page. By the time I was already able to announce it, it was 50 cents higher. So it does work out that way, and I can attest to that. And I wouldn't tell the listeners that if it wasn't actually true. So if hopefully that helps that listener who had the question about what should you do in that, patience. I stress patience a lot. So hopefully that's helpful. Sometimes you're going to miss them, but then the times when you actually are patient and get it, it really reaps the rewards.
Yeah, sitting here watching this Lab D, I was actually about to post a comment on that. I got shaken out of that this morning on the swing trade, and now this thing is launching. It's like 2 points off the early lows. But yeah, it's something to keep an eye on. I've been kind of waiting for an opportunity to, well, I've been putting on this position in the 3-time short biotech ETF, just waiting for a reversal, a pullback in stocks following this big run off the December lows, and looks like it may be starting here. And unfortunately, we don't have that Lab D on, so I got to figure out how to get some short exposure here soon.
All right, let me see if there was another one that was directed to you as far as questions. Let's see. Any way you can give a little color prior to the trade, or is it too fast and not efficient? I will say, Scalp, I've noticed you highlighting some of your trades early on. Hey, watch out for this one. I do think that the listeners definitely appreciate at least getting a sense of what you're looking at, so they want to understand, how you trade, because they want to be successful traders as well.
Yeah, I mean, that's a very good point. I know you and I have talked about that on a number of occasions, and the issue with that for me on the scalping side, like I'm happy to do that on the swing side, and I talk about names that I'm looking at. But on the scalping side, I've learned that people will front run me. So even if I just mention it, like they will front run me with size, and it really just changes the whole structure of the setup. And so I'm not getting a clean read on the price action. So yeah, that's an issue when you're looking at trying to scalp something for $1, and you get someone trying to get in front of you in size. It really changes the whole nature of the setup. So I guess the one thing that you do know about me and everyone will see is that I tend to trade a lot of the same. Like I'll trade the same 3-4 names for weeks at a time until I kind of shift to another group of names. And so every day those same names are on my radar. So like every day the pot stocks are on my radar, biotech is on my radar.
Roku.
Yeah, Roku. Yeah, all kind of like the momentum tech names. Right now I'm doing a few distress types of plays. I'm always looking at some of the other names that I'm always looking at include like TTD. I have pizza on there right now, PZZA. What else? MDB, AMD, PYX. So I have some of the basically the same names that I'm kind of looking at day after day.
All right. So what do you tend to do when you're, for the most part, done for the day? So you wrap up a lot of your trades, make your money in the daytime like today. Then how do you spend the rest of your day? I know that you're here, so I know you're not out golfing or do whatever it is that you do in your free time. So you must be doing some type of research. What do you do?
Yeah, so I love research. I honestly do. I think that you can just make so much money off knowing exactly what you're buying, and that's a big change from my early days when again I was just trading momentum. I didn't really know what the companies did, just really no understanding of any of that. So it's kind of like if the tide's coming in, I want to ride it. If it's going out, then I want to get off. And so now it's I don't care where the tide's going. Like I honestly I prefer if people don't like it and they're puking it out, and I understand it, and I tell you I'll buy a lot of it. And so that's what I mean. So like already this morning. When I was, I kind of looked at I wake up typically around 4:30 or 5 a.m. and just start looking at the market, looking at the overnight action, scanning in play to see kind of looking at our news and see what's going on, see how the market is, which way the market is gapping, looking at the futures. And so, kind of once I look to see if any of my intraday trading names have any news or there will be any opportunity in those, then I'll start to look at research opportunities. So like, for example, this morning I was researching a closed-end real estate REIT that I just thought was kind of an interesting play because they do both preferreds, they do actual real estate, they do some investing in distressed real estate. And one of the things about closed-end funds is that a lot of times they'll start to trade like at a big discount to net asset value. And so we get periods like December when people were kind of just throwing everything overboard. The discount to NAV can become relatively large. So situations like that where I can pick up yield, buy something at a huge discount to NAV, and understand the structure, the strategy, and feel confident in the managers, maybe I can buy something at a 30 to 35% discount to net asset value, buy large, and let it kind of close that gap. I think this one is now trading at a 10% discount to NAV. So it's still a big rebound, and it still should rebound, even further. I was trying to think. What I was looking at another kind of REIT situation this morning, as well as also looking at some of the news on the various marijuana stocks. This afternoon, I don't really have a specific name that I'm planning to research this afternoon. I'm kind of just paying attention to the overall market here. I want to see if there are any shorts that set up. This LabD is really kind of frustrating because it got past me. I was trying to position for like that shakeout, like with biotech, it always kind of presses you to your pain point and then reverses sharply to the other side. And so I was trying to factor that in, and I didn't quite give it enough room. Like I think it hit my stop and then fell another 60 cents before it reversed hard to the upside. So the other thing that I'm waiting on is to see what the monthly distribution is going to be for our MORL position, which is something we bought in early January, and this is the 2x leverage mortgage REIT ETN rather, and they make monthly distribution payments, and they have one big quarter because most of their holdings pay quarterly, but they also have a number of names that pay monthly, and so they make one kind of big quarterly distribution and then two smaller monthly distributions. And so I'm just kind of waiting to see what that monthly distribution is going to look like. But this thing has just been an absolute monster of a performer for us. I think we're all, in all total, probably up about 30%, including distributions at this point, since just the start of January. And, this is a name that I think we bought it at I think it was around a 27-28% distribution yield in an environment that should be really favorable for this asset class. So, that's just one of those things where you buy it right and you can sit on it for ideally for years to come and literally pick up 27+% per year and not have to do anything.
That actually leads into another listener question, and I'll read it to you. Do you hold some of your positions long-term that you close out on the site? He says, it sounds like from what you were saying here in our discussion about being set up for the next couple of years, that maybe there's a little confusion over some of your portfolio holdings versus some of your intraday trades.
Yeah, so like, for example, like the MORL, I haven't closed any of it out. This is something I'll sit on. With the scalp stuff, or the short-term swings and momentum names, I'll definitely close a lot of that out. And, so after a 20, 30%, 40% run, I'll start to lock in profits. But anything that pays a distribution, if I'm buying that, I'm probably... Yeah, it's very unlikely. It's very unusual for you to see me sell anything that has a yield attached to it.
Right, and I think it's just important, and I try to do try to differentiate what the individual trades are, so that the listeners out there will know which are the intraday type trades and which are more the longer term swing trades, what have you. So I do try to differentiate as best I can, so that hopefully it alleviates some of the confusion, but I can understand where the confusion would come in. So I'll just try to do a better job of differentiating that and trying to make it as clear as possible. And if there are any questions, please feel free. Let us know, and we can clear it up as soon as we possibly can. Any parting thoughts, Scalp, that you may have for, or any just maybe last minute tidbits for our listening community?
No, I can't really think of anything at this point. So it's always a pleasure. And yeah, if you guys have any questions for me, feel free to write in on feedback.
Absolutely. Hit us up with the follow-up questions if you may have, and maybe we'll have them jump back in and talk about it if it is more appropriate to do it that way. But he is always good about getting back to the listeners and any feedback questions that we have from the Briefing Trader page. So, as always, Scalp Trader, thank you so much for joining us. Very influential.
You're welcome. Thanks for having me on, Jim.
So some good stuff from Scalp Trader there. Always learn a lot, diving into his thought process, his strategy, and how he formulates trading ideas. One thing that I picked up from him on this one is actually a reiteration from one of my first trading managers or mentors, if you will. His advice was never do a trade today that you didn't think of yesterday. And I think it echoes that process of him doing all that research to come up with ideas so that you're prepared for the trading day or the days to come. I do that a lot of times in the pre-market, where we'll look at an earnings play or whatnot and say, hey, these are some levels that you may want to look at down the road, because they don't necessarily hit on that particular day, but if it's something, a name that you like, here's some levels, here's some key inflection points, you can point those out and throw them on the radar for a prior day. I know Blue Chip Trader does a lot of that as well. So the good news is that if you did miss anything, we have this archived, and should have it on the archive site in about an hour or so. Early afternoon. Taking a peek at the markets here, we're back inside that opening range for the S&P futures, and you can see let's look at the NASDAQ and the S&P here. So the S&P on my left and the NASDAQ over here on my right. That R1 level is held up nicely in the NASDAQ. So I'm looking at the NASDAQ chart on the right, mini NASDAQ futures, and you can see once we got that pop, it's been sitting there for most of the morning. It's tested it 3 times now and is held up. So 69, basically the 7,000 area. I know Chart Trader was potentially highlighting a potential flush through that 7,000 area. So far hasn't really broke through and gotten him that that run of stops that you would expect at that key level. S&P futures, on the other hand, has come back off that R1 level and now back inside the opening range, trading right around the midpoint of it. So definitely want to watch that. If we did get a afternoon breakdown through this opening range, that might be a juicy short, and that would imply all these new, maybe late to the party buyers that might have stepped in right here from the open on in, and you can see this actually made pretty close to an outside day, or an outside time bar here. It wasn't exactly, but a lot of times that will signal a reversal. and that might be the case right now. At least it was in this little tight range of about 7 points from where that bar occurred. But this a breakdown through the opening range would be something to really watch out for on this downside, because a lot of longs would be trapped, and I would look for that target of 27.14 should that happen.
Hey Jim, I just wanted to jump back in and address this question about holding positions kind of long term. And so, again, this really applies to yield-related instruments. So, when I talk about, say, potentially not having to really make any shifts to the portfolio for several years, really is just talking kind of about that base income that I'm looking at from the portfolio. So I'm buying names that have yields of 10% to up to 28%, so maybe a blended yield of 16%. And so just as base income, 16% on the portfolio. So my point is, as a base scenario, I'm very happy with something like that. And that doesn't mean that I'm not going to be actively looking for more opportunity. I mean, 16% is not what I'm looking for on an annual basis, but it provides a good start, just knowing coming in every year, potentially without doing any additional work, you have that 16% or so coming in, which is far ahead of anything that typical equity markets return. And so again, this really applies to when I look at an income investment. I typically hold these for just many years, especially if it's kind of a distressed situation that I feel like I'm buying right. And so I mean, there's stuff that I sold maybe two years ago that I held from the financial crisis, that I held from 2009 maybe. So essentially holding these things for 8 years, some of these positions. So I just wanted to clarify from that standpoint that, again, I'm always looking at kind of annual performance. And if I can get positions into the portfolio that are going to provide really strong distributions or income over an extended period of time, as well as capital appreciation, it's very unlikely that I'm going to sell those until I see really substantial gains, and only then will I start to sell them if I feel like the price is just well above fair value.
Oh, sorry about that. I had my mic off at the time while you were doing that. Yeah, I appreciate the clarity on that one. If there are additional questions, hit us up. But, Scalp, sometimes you do tend to hold some of your... I think what you have done in the past, and I can't remember if it was Roku or another name, maybe it was LABD, I'm trying to think which one it was, but there was a time last week in particular where you put on a trade in a scalp trade, and then it was maybe 5 minutes later you put on the same trade in a swing trade as well, and you'll hold that one, right?
Yeah, exactly. That was actually Lab D, I think it was.
Okay.
And so yeah, I was hoping to scale in on the swing side to capture possibly with Lab D a 20 to 30% move but also thought I could possibly time the bottom on this thing and maybe catch $1.50 to $2 intraday. And that, I mean, that's really how I approach my portfolio as well in terms of kind of my more active trading side. You know, I typically will put on well, I mean, it just depends. I mean, if it's something that I feel like has long-term upside, I will put on a swing position, kind of a core position that I trade around, and I may step in and put on some swing position, I mean, intraday scalp positions, you know, around that core position periodically.
Okay, and it's good to differentiate between those so that so they know which ones you're going to hold, which ones you're not. And not everyone has multiple accounts that they can scatter across. So hopefully people out there can allocate that particular trade appropriately and size it up so that they know, okay, this is a scalp and this is the amount of size that I'm going to use on a scalp trade, and this is the size I'm going to use in a swing trade or a long-term investment. So I'm assuming that the sizes of those particular trades will be different, and there might be a case where there's a first in, first out, and the average price may change along the way, right? So I guess that's one element of confusion that people need to take into account.
Yeah. I mean, it's not often that I'm doing, in terms of a trade on the side, that I'm doing both kind of a scalp and a swing. But I mean, it'll happen
Right.
maybe one out of every 15 or 20 trades. So yeah, definitely something to keep in mind.
Yeah, you just have to be cognizant of it as to not get confused. All right, Scalp. Feel free to chime in if you have any additional updates.
I will do.
All right. All right, so it looks like we're seeing that flush that Chart Trader was highlighting a little earlier. This flush in the NASDAQ as it dips down to the 69.92 zone. Looks like we put in a low on this chart. Let me expand it. At 69.91 in the futures. And we now have that breakdown below the bottom of the opening range in the S&P futures. So things may be setting up for a midday reversal. Taking a look at the tick data, we've got a negative 500 right now. The advanced decline line has settled in. It's still slightly positive, plus 200, but based on where it was throughout the day, I think we had prints of plus 2,000 right around there. And so we've essentially got back to the neutral zone almost in the advanced decline line. And here we are, the S&P still up 5 points. But looking at that NASDAQ chart, where we settled in for quite a while, that R1 level was holding up as support once it broke through, and now we're breaking through the downside there and continuing to traject lower.